Today we will be discussing whether or not the Fidelity Zero Index Funds are worth it. Let's get into the video. Hi everyone, my name is Zach and welcome back to Finance Bro. Before we get into the video, I'd like to ask you guys to please leave a comment of your favorite stock brokerage to use, why it's your favorite stock brokerage to use, and also leave a like and subscribe as it really helps with the YouTube algorithm. And if you guys want to join our private Discord where we talk about stocks and crypto, then go ahead and click the second link in our description and get signed up through Patreon. With all that out of the way, let's get straight into the video. So recently, Fidelity started to promote their zero cost index funds, and honestly, they are very good in my opinion. Although there's a lot more nuance to be talked about with these index funds, so let's get into a more in-depth reason why these are actually pretty good and might be worth investing into if you are trying to, take a very passive approach to investing. So to start things off, there are actually only 4 index funds that actually have a 0% expense ratio, which is basically how much you are going to pay to these fund managers to actually manage the fund. But since they basically just set it and forget it and have a very low turnover ratio with these index funds, they actually are you are actually charged nothing to hold these funds. So that is why they are so cheap. Really, Fidelity is doing this because they want to attract more customers to get them away from, say, Vanguard, and kind of attract them and hopefully sell these customers on different types of mutual funds and ETFs in the future. But these 4 index funds are going to be FNILX, which is Fidelity Zero Large Cap Index Fund, FZROX, which is the Total Market Index Fund for Fidelity Zero, FZILX, which is the Fidelity Zero International Index Fund, and then FZIPX, which is the Extended Market Index Fund. The diversification here is actually pretty good if you're only to hold these 4 index funds. Honestly, I wouldn't be too mad at that in your portfolio, as it covers pretty much everything that you need. It covers the S&P 500, which is basically this fund. It covers the Total Market Index Fund, which is basically like the comparison to VTI or VOO for FNILX, and then we also cover international, which you usually want to have between 10 to 25% of in your portfolio, and then it also covers the extended market to get you some more tendies or more growth when the stock market is overall doing good, basically adding more risk to your portfolio, but you also do get more losses when the stock market is doing bad. So overall, the risk is pretty good here. I would expect anywhere from about an average of 10 to 12% out of this portfolio over the next 10 years. But really, that is one of the bad things about the Fidelity Zero Index Fund. They actually have not been around for that long, so we don't have enough data to really go off of. When I am researching different index funds, ETFs, and mutual funds, I try to look at their 10-year returns and compare them to the rest of the market. So say I am trying to look at a total market index fund, I really want to look at how it's performed over 10 years compared to, say, maybe Vanguard's total market index fund. With this, we can't really do that because they've only been here since 2018. But we can still look at their holdings as well as their turnover rate to kind of see if this is going to be a good index fund going forward. Alright, so now I want to do a little bit of analysis on each of the 4 index funds. So here we have the large cap index fund, and this is pretty much going to be the S&P 500. Obviously, if you actually say S&P 500, you are going to need to pay out the S&P 500, so they can still have the same basically holdings as the S&P 500, but the allocations might be a little bit different compared to, say, Vanguard or something like that. The turnover rate for this index fund is about 9%, and that is how much basically a stock is bought and sold within the portfolio. A low turnover rate means that it's passive and you're not going to be having to pay taxes and everything on too much. So yeah, if you have a high turnover rate like 60%, that basically means that this fund is going to be selling and buying. Well, obviously index is they're going to be selling it, not going to be selling, a lot. But say if you were in a mutual fund, there's probably going to be a high turnover rate where they're buying and selling a lot to kind of make their money's worth, because they are going to actually charge a pretty high expense ratio. Obviously, there's a 0% expense ratio, and the top holdings of this is of the fund is going to be Apple, Microsoft, Amazon, Facebook, Google. Google, again, they have two different ones. Basically, Google is the one with the L, is the one that has voting rights, and Google is the one without voting rights, or maybe vice versa. I really can't remember. Tesla, Berkshire Hathaway, JP Morgan, and Johnson & Johnson. The fund objective is basically to provide investment results that correspond to the total return of stocks in the large capitalization of U.S. companies, and this can basically also be described as trying to match the returns of the S&P 500, but obviously they can't really say that because of legal reasons. Overall, it has very good returns of about 41% in the last year. We are coming up on 3 years soon, so we'll be able to get that data soon, but obviously we do not have that yet. Life, it's done about 17.89% every year that it has been a index fund. So overall, this is going to be compared to VU, and you can see year to date they have actually done about 16.86%, and year to date the FNILX has done about 16.06%. So off by only about 0.80% compared to what it's supposed to be tracking, as well. Next up, we're going to have FZROX, which is the total market index fund. So obviously this turnover rate is a lot less, about 4%. That's what we like to see out of an index fund. 0% expense ratio, obviously. Also done about 16.38%, which is also going to be compared against VTI. So you can see here that VTI year to date has done about 16.32%. So this is supposed to be tracking pretty much the same stuff, but it's done a little bit better than VTI this year at least. As for the top 10 holdings, pretty similar to the last index fund, but Apple, Microsoft, Amazon, Facebook, Google, Tesla, Berkshire Hathaway, JPM, and J&J. So basically the same ones, but the objective of this fund is actually going to be to provide investment results that correspond to the total return of the broad stock market, basically all of the stock market. They have about 2,600 holdings, so they are very diversified as well. So VTI has an expense ratio of about 0.03%, which is actually going to be very, very nominal. So basically you're paying nothing per like $10,000. It's like $3 for VTI, but you would make more money actually holding the Fidelity Zero Total Market Index Fund than holding VTI. So that's just something very interesting to think about. So next up, we are going to have VZILX, which is going to be Fidelity Zero International Index Fund. The turnover rate is a bit more on this one, about 11%, still not too bad for an index fund, and the holdings are going to be some companies that you don't really know. Obviously Alibaba going to be the most reputable out of any of these. Taiwan Semiconductor, I do know that one. Samsung, obviously. Nestle, Toyota also on here. But basically, a lot of things that you're not really going to know, but it does have 2,300 holdings that kind of track like international. So this is a foreign large blend index fund. So you're basically just getting diversified to international, just in case the U.S. Takes a crap. But this is actually going to be compared to VXUS, which is actually up 6.5%. Year to date. For Vanguard's basically same index fund, and then the Fidelity Zero is actually up 8.8%, so also outperforming VXUS. So out of the three so far, these FZROX, VZILX have outperformed Vanguard, and then the S&P 500 one actually has not outperformed Vanguard, but it is very close. So honestly, and basically you're getting this for all the no expense ratio. All right, let's go into the last index fund. We can actually see here that this is a Fidelity Zero Extended Market Index Fund, VZIPX. This is going to have a very, very high turnover rate, and it's because this is the extended market one. This is the one where they kind of want to drive more gains when the stock market is doing well, and they just want to make the risk a lot more in this particular index fund. But this is going to be actually be compared to Vanguard's extended market index fund, which is VEXAX, and they have actually done 15% over this last year, and Fidelity's has actually done almost 18%, so outperforming by about 3% for what is supposed to be the same type of fund. So as you can see here, they have American Airlines, L Brands, X-Ray, Airbnb, the list goes on, Snowflake. This is kind of trying to be a risky portfolio that will have more gains, and it has worked out so far and outperformed Vanguard's by about 3%, but there's probably a bit more risk in this portfolio, and there is a very high turnover rate. So overall, about 3 out of the 4 index funds that have zero expense ratio did outperform Vanguard's index funds, although Vanguard's index funds expense ratio is very, very minimal, about 0.03, basically going to be nothing. Even if you're investing millions, it's really going to be nothing to you. So there's not too much of an expense ratio, but Fidelity's zero expense ratio index funds have outperformed Vanguard. So that is something to take into account if you are already on Fidelity and thinking about making a Vanguard. You guys can just look into these zero expense ratio funds. They are very good in my opinion. They have the Finance Bro seal of approval. But what do you think about these index funds? Are you going to consider investing in them? Let me know in the comment section below. Also, consider leaving a like and subscribe, and consider turning on post notifications, as it really helps the channel out. But my name is Zach. I hope to see you in the next video.